Hello, merhaba, hello everybody. Thanks for coming here. Thanks for the organizers for having us. My name is Cem. I'm director of partnership at Stellar, and it's great to be back in my hometown, Istanbul. James, let's start with a quick intro.
Thank you, Cem. Pleasure to be here as well. James Morek, I co-head the institutional sales team for EMEA and APAC at Coinbase. Been with Coinbase now for 4 years. Previous to that, I was at BlackRock, ran an institutional sales team there for the liquidity business for nearly 12 years.
Awesome. Great to have you in Istanbul. First time in Istanbul?
No, second time. So, and not very far apart, so hopefully it becomes more frequent.
Nice. Okay. So let's start. When you look at the institutions today, what actual participation in crypto look like in practice versus the narrative?
Yeah, so good question. So I think we all see quite a lot of announcements and people making good PR statements, but what it actually does institutional adoption mean, and where are we? So I think we've certainly seen sort of asset managers come to the fore. We've seen very publicized ETF launches. ETP products in Europe have been around for some time now, and across the globe. So I think they have been sort of leading the charge. Hedge funds after that, I think we're seeing more and more TradFi hedge funds starting to open up certain sleeves across their sort of macro portfolios and becoming more interested in this space. So I think adoption there is coming. We've obviously had a big rise last year in corporate DATs, so digital asset treasuries, and just corporates holding Bitcoin on the balance sheet. We've also probably seen the SpaceX announcement recently, and others. So I think Bitcoin or crypto has become sort of an acceptable balance sheet holding for certain corporates to diversify, especially. I think we're now starting to see banks coming into this space. Some have been a bit more forward-thinking, but certainly others have now, because of regulation and where it stands, they've certainly felt that they can operate in this space, and we see that happening. Now, these banks take a long while, and so they're not sort of rushing to the market, but they know they need to offer those solutions to their clients because they often see those clients coming to us. So we look to try and support them doing that. And I think the last remaining sort of segments, I'd say, in this space that we really need to sort of say that the institutions are here, are really across insurance companies and pension funds. And I think we've started to see pension funds start to dip their toe in. But I think more regulation for them in their segments is going to be the key enabler there. So I think that'll be when I do say that institutional adoption is fully here, but we are seeing it. I think, the last one as well is sovereign wealth funds. We've certainly seen them start to get exposure through the ETFs, and they're now coming in a bit more direct. I think they've needed the market to be a certain size. They come in with big clips, and so they can't necessarily participate when there's low liquidity. So I think we're starting again to see that materialize, which is super exciting.
Yeah, I mean, liquidity and distribution is very important. As you mentioned, last 2 years things changed, right? The FIs are now into crypto, the insurance companies, the hedge funds. What do you think was the main driver? I mean, it's probably more than one, and you mentioned regulation, but what else do you think contributed to this?
Yeah, I think regulation and infrastructure, right? They're what you need. They're the sort of plumbing of any market. And I think post like FTX, we've seen a lot more viable players have the infrastructure needed to support institutions. Coupled that with regulation, we've had MiCA for some time now. We've had other regions have regulation, Turkey especially as well, and that provides guardrails. Sometimes they can be quite narrow, but it means that there's a playing field for which they can operate in without getting their wrists slapped. So I think those two provide the sort of framework within which they can operate, and then I think it's just more along the macro side of things in terms of the environment, and that allows for certain institutions to either play more aggressively or to offer solutions to their clients because the demand is building.
I see. Yeah, that makes sense. I totally agree. So it's kind of like regulation opens the door, infrastructure is the door, and the macro is the timing when you go inside the door.
Exactly.
And all goes hand in hand together.
Exactly that.
Great. And a lot of people are thinking regulations are as like a blocker or challenge, but I think it's enabling the adoption. I'm curious, from your point of view and from your side of the world, um, does regulation shift is seen as a constraint, or is that something that enables the adoption and more different type of entrants in the market?
Yeah, I think I've probably never worked in an industry where you just want regulation more than
Yeah.
than anything else. And I think most panel sessions talk about regulation when it comes to crypto as well. So certainly as an institution, Coinbase has been very public around wanting to operate in regulated markets, wanting there to be regulation. Super excited about the Clarity Act in the States and the enablement there. We've certainly seen a lot of more institutions coming to us now that they see a framework in the US, but they can operate globally under. Maybe they're headquartered there, but they have regional offices. MiCA as well has certainly been an enablement for firms to operate and institutions to operate. Probably a bit slower, I'd say, than the sort of the progress we're seeing in the States, but certainly an enabler. And those are two massive regions, right? And then we see other frameworks working more in pockets within their own regions and healthy crypto markets resulting, right? And everyone wants to sort of operate where there's healthy consumer demand because institutions like to offer consumers institutional products. And so we see that definitely playing out in Turkey. We see that playing out in South Korea. We see that playing out in lots of other regions as well around the world.
Yeah. A follow-up to that. What signals would need to be present for an institution like Coinbase or other institutions in the space to take more active role in a certain geography? Doesn't matter where, but what needs to be happening?
I suppose if I take the example of what we've done recently, we've gone into India as a new region. We've set up our own exchange there. We've have our own sort of Indian rupee pairs localized. We've done that through a JV. I think we can see certain markets as being very attractive when they have high crypto volumes, large populations, and a regulatory framework to operate in. Obviously, there is a resource and a cost to that. So we have to be careful about like where we put these sort of targeted bets on because we want to operate in regions where we are compliant and that we have the right resources to meet the regulatory framework that there is there. So I think those sort of frameworks set ourselves up to operate there, and I think I'm excited to see the success of what we do in India. Hopefully we can replicate that across other regions.
Yeah, that sounds great, and that's very exciting. India was a huge market, and Coinbase is the pioneer who got in there first. Very exciting. When you think about like India and some of the other markets that you mentioned have some similarities to emerging markets in the sense that it's very retail oriented. How do you see the effects of retail, or is retail activity a signal for the institutional side, or what's the connection of that?
Yeah, I think look, retail activity is definitely encouraging for institutions. They certainly, and that's not just sort of traders who want to trade against retail clients. From an institutional perspective, that's, as I mentioned before, that's creating certain products, creating certain features that they can sell into the consumers more broadly. I think also if there's a active market there, then obviously institutions feel like they can service their clients who are retail clients with additional products. They can earn more revenue from doing that, or they can. What we definitely see is a lot of institutions wanting to keep those clients within their own ecosystem and not have them leave. And obviously, we've been the net beneficiary of that, and then coming to Coinbase. But we understand that there's other institutions that want to offer a broader range of services to those clients, and that's probably where we're seeing the market going now, where we have the launch of tokenized stocks, you have prediction markets, and so I think there's going to be this sort of blurring around clients being able to have one access to everything on chain, and institutional providers being able to offer everything to those clients.
Before Coinbase, you were in TradFi for years on the top level, top positions and top companies. And what is based on your experience, what is the main differences in terms of asset class risk in crypto versus traditional, equities or FX? What are some of the new stuff that the institutional investors or the institutional players need to consider when they're getting when they're active in the market?
Yeah, I think for some institutions, they definitely need to get through the sort of potential view that they have at the board level of like reputational risk and is there a security risk. There's additional, crypto's definitely treated as a high risk asset, but it's also an asset that trades slightly differently to other assets in terms of 24/7 out of settlement windows. Can they use stable coins to settle over the weekend? There's all sorts of operational considerations that have a risk element to it as well, that we see institutions starting to grapple with. But with the rise, as I mentioned before, of like tokenized equities and prediction markets, those also worlds are starting to merge in terms of the requirement for these institutions to start being able to support a broader time frame within which to trade. There's obviously counterparty risk. There's new counterparties that are not normally on their sort of counterparty roster. Analyzing those is a bit more of is a different process potentially, or there's different considerations. So that's definitely all added to the normal sort of risk framework within which they normally work to. There's the usual credit due diligence and other things that they'll do, and they'll follow the same process as well. That being said, it's a very cautious approach, particularly from the traditional finance institutions. They want to do it, they want to get in, but they're going to take their time to make sure they've gone through the right steps. And often that diligence takes a long time, and you need a bit of resource to help support that.
That's great. You mentioned stablecoins. Stablecoins are now the popular thing in crypto. I guess everyone became a stablecoin expert. Based on your experience and the view and insights of the space, where do stablecoins sit in the institutional stack today? Is it mostly trading, treasury, cross-border payments, or remittances, collateral? Like, what do you think about stablecoins?
Yeah, I think all of that in terms of depending on the type of institution. But I think what we're seeing is the rise of interest in it being used for collateral. And so we're starting to see brokers look at this as an acceptable level of collateral to offer to their clients. We're working with certain CCPs in order to try and accept stablecoins. That's not happening just yet. But we definitely see that there's more demand for that. And again, it goes to that point around mobilization and the frictions you get with fiat and transferring fiat, which has been predominantly the sort of collateral asset of choice, particularly for variation margin. So I think we see that trend continuing, and we're sort of very supportive of that from the on-off ramp. But yeah, no, like, I mean, I think we saw, particularly through last year and into this year, sort of cross-border remittance and payments is definitely a really good fit for stablecoins, and it's definitely causing a lot of disruption. And so we're seeing a lot of that and looking to support that wherever we can.
Awesome. I love your answer, by the way, because usually most of the people are stuck with the payment aspect, but the bigger picture is the collateral, how you can turn, like, I know I'm using but debt capital into productive capital. Correct, and that is through stablecoins. And stablecoins are kind of enabling interoperability too. So it's more than just sending US dollar or USDC from one wallet to another. The potential is so much. Yeah. But I think a little bit on the other side of things, right now, especially on the cross-border payments using stablecoins, if there's like a double FX or multiple FX, do you think it's really more convenient or cheaper to use stablecoins? Because now, going back to your point on the previous conversation, we keep adding more intermediaries, and the dependence to first mile and last mile. Do you think things are going to change in those payment flows, or?
Yeah, there needs to probably be a bit more interoperability, and there's still some friction. You're needing to use one provider, certain stablecoins being accepted, and also I think something else is that from a dollar market, the stablecoin market is pretty mature. When you look at other currencies, those stablecoins are pretty small in terms of overall asset size, and if you want big flow or institutions to come in, they won't want to be a big percentage of that stablecoin. Yeah. In terms of size. And so I think there's certain aspects of that within the market yet that needs to mature for some of these frictions to reduce, and for then you to see like real adoption. But I think there's no getting away from the fact that there is a speed and a cost reduction within that, and I think FX markets are ripe for that.
Absolutely, absolutely. And I mean, even in some situations, it's just better. Not necessarily, maybe it's not super cheaper, but it's better. Better in the sense that it's faster or more convenient, or there's a business case or opportunity that that makes you use it. So I'm very excited about where the stablecoins on payments and all the intersection of all that is going.
Yeah, I think in the future it'll be the settlement leg on the behind the scenes, but you won't actually know that that's
what's supposed to be. You know, like stablecoin should be a type of commercial money. Like we shouldn't even talk about who's the issuer, who's this, who's that.
Exactly.
It's your US dollar bank account with a US bank, my US dollar bank account with a Canadian bank. Both shows US dollar. None of them are the same. Like why don't we have the same mindset for stablecoins? But I think it's early. We're getting there and all that.
Exactly. That'll be the true indicator for adoption.
Yeah. I mean, when we stop talking about adoption, that means the adoption is here, I guess.
Yeah.
I have one more question. So if we come back to Istanbul, let's say in 3 years, what change in institutional crypto adoption will feel most obvious in the inside? And it doesn't have to be Turkey specifically. It can be emerging markets, APAC, Middle East, Europe.
I think to the point we just made there, I think there'll be less focus on which chain or which token this is, and more around like the financial apps and everything that sits on top of it. And so the obfuscation for what the actual blockchain layer is, I think, will be very much apparent. So I think that is one thing I think we'll certainly see. I think just I think it'll be more common now to have allocations to crypto within an overall portfolio. I think you'll see pension funds opening up a lot more, and they already are starting to do that from a global perspective. And I think everyone, maybe there's a new asset that we haven't talked about today that emerges.
Awesome, great. One last question. I know I said last question, but this is my real last question. We're almost halfway of the year. What are you most excited about the end of the year? Q3, Q4? Could be what you guys are working on at the Coinbase institutional side or overall industry.
Yeah, so from a Coinbase perspective, one of the things we're working on is sort of we have a lot of platforms that are out there, and we're looking to integrate them all into one. And one of the things I think is sort of missing from the industry a bit is having more ability to have more capital efficiency, right, cross-collateral. And so we acquired Deribit, the options platform, last year. We have a perps platform that we're going to integrate into that Deribit platform and then move that into Prime. So I'm super excited by like having that. We made an announcement last week that's in the public domain that we'll be able to, through our FCM in the States, provide access, onshore US access to offshore options.
Wow.
And so that also should be pretty exciting. The feedback's been very strong from clients. So those sort of things, I think, I'm excited about the product development that we're providing, and I think they meet a need and a requirement in the market. So super excited to see where that goes.
I'm also excited to see that. I think we are out of time. I have so much more questions, but we're out of time, unfortunately. Thanks for everyone who joined us.
Thanks, Kim. Appreciate it. Thank you all.